Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. After that, we will be taking a brief tour through our core list of companies, and if you stick with me towards the end of the video, I've got just one extra trade idea to share with you today, so definitely stay tuned for that. I'm seeing many of these charts for the first time. I was away from the desk today, so bear with me as we move through them. Let's see what we can learn together. Let's kick things off in the S&P 500 with our sectors. Who was leading, who was losing, and where was the weight? Oops, the tool doesn't want to work today. There we go. We have the XLU at the top of the list for utilities, but really not leading by any stretch of the imagination. It was just down the least, only 0.97% on today's session. The XLY is at the bottom of the barrel for the consumer discretionary sector, down 6.54% from the prior day's close. From today's open, down 3.92%. The reason I bring that up is because the true loser on today's session is actually the XLP for consumer staples, down 6.43% from the prior day's close, but from today's open, a whopping 5.4%. Absolutely hideous move there inside of consumer staples, largely brought to you and kicked off by the gap down from earnings inside of Target. It drug down with it, obviously, Walmart, Costco, Kroger, Tyson Foods, Coca-Cola, all those big consumer staple names really got beat up on today's session. In terms of our heavier weighted sectors, we know the XLK is the tech sector, the heaviest of them all, still skewed down towards the bottom of our list, a whopping 4.58% to the downside today there. That's still a nasty move. It might not seem like a lot in the light of 6% reads that we see here, but still 4.58%, hideous move inside of tech. In terms of the second heaviest weighted sector that we're watching, the XLF for financials, up here down only 2.75%, big air quotes around only. 2.75 is still a significant read to the downside, right? The same thing will hold true for the XLV, which of course is healthcare, down 2.58%. Let's check in on some of these structural charts just to see how things are shaping up here. Utilities backing off of the highs of this consolidation range. We know that they were down the least, and obviously we know that this being a defensive sector continues to support the idea that risk is currently off. Let's continue along and see what energy is telling us. Anything interesting here? Absolutely. Remember that this is a consolidation box. We made a new all-time high outside of it, literally on today's session with a gap up, and we just pulled back a little bit, right? We're still basically sitting at all-time highs here inside of energy, being a defensive sector, still continues to support the idea that risk is off. Next up, we have the XLV for healthcare, heavier weighted sector. So let's spend some time here. Obviously, we have this range, and this critical support is here. Let's go ahead and circle all those instances around 125. We clearly have on today's session a bearish engulfer. I'll zoom in just a second, but also a clear lower high has now been established. Again, the pointer tool really acting up today. Sorry for it just deleting there, but nonetheless, you get the idea. We have a clear lower high. We have a bearish engulfer taking out, not only this day of up, but also one day here and another day there. So 3 days engulfed essentially to the downside. We're looking for an equal low in short proximity of time here to the 125, which is obviously bearish drag for the S&P 500. And if we draw in a little bit of an H pattern, right, we know if we get an equal low in short proximity of time, boom, we're expecting that to break, right? You generally don't expect that to hold as a massive double bottom, especially after big consecutive lower highs and directly from the top end of the range here, right? So overall, the XLV does look concerning as we come into 125. Just watch this number into the remainder of the week. I don't imagine that we want to put in some structure that looks like this, just nasty into the end of the week. Again, I didn't watch today, so I'm not quite in tune with the tempo of how today's selling unfolded. But I would say, this is probably a less probable scenario as opposed to something that continues to drift in and maybe just gets close to that 125 for the end of the week. We'll see. I could be wrong, but for now, we are looking for lower in the XLV, which is bearish drag for the S&P 500. The XLF for financials, again, a heavier weighted sector, so let's spend some time here. I think the theme of this will just be that obviously we have put in now clear lower highs across the board in all of the meaningful sectors. So lower high is in place. Notice that it never made it up and over or anywhere close to that breakout point here for the equal high. It's very unlikely that this is going to, do something like this and start to build out a new uptrend. So I'm not really convinced that we're seeing a higher low here. And instead, we're coming in for the equal low at this 33, again, in short proximity of time, just like we discussed on the XLV a second ago. We are looking for this to break down. Of course, we're looking for the low of this wick here around 32.41 as your first sort of maybe baby bump in the road, but ultimately after that, we have 31.55 as our next support. Obviously, downward pressure pressure for the S&P 500 with the lower high. The trend just continues to be lower here and steepening. Notice the distance now between the 200 and the 50 SMAs here as we move lower. So overall, bearish look in the financial sector. We'll hang off on the rates for just a second here and continue through all of the sectors. Then we'll get to the TNX and more importantly, bonds, just because I want to talk about what's going on there. But for now, the XLRE for real estate, you can see this couldn't get out of its own way. There was no breakout up and over the highs early on this week. We're right back down at the lows. Overall, this strikes me as a bear flag look. We know that this is a defensive sector, so the fact that it's not leading the charge to the upside is good, but we also don't want to see this falling off of a cliff, right? If we just scrunch up the chart, notice that we're underneath this sort of zone of support around 44, not a good look, right? It would have been better to see this thing kind of doing this. Obviously, that's not the case as of right now, so continued bearish drag in the real estate sector, which will be bearish drag for the S&P 500. No bueno. Continuing along, XLB for materials. Obviously, this is a lighter weight sector, just kind of hanging out. This would have been a better look for real estate, right? If real estate could have done something like this, just big sideways activity, that would have been a good look. Obviously, it's not the case. But in the XLB, it's fine. Like as of right now, we are putting in that lower high, the obvious lower high, right? But we certainly have not broken down through the support just yet around 80. So do I think we're going to 80 into the end of the week? Yeah, it would look likely based on the bearish engulfer and sort of the same sentiments that we've been discussing on the charts so far. Lower is the outlook, but overall we're still inside of the range, which is, more of a neutral indication as opposed to an all-out bearish indication just so far, right? Obviously on the break of 80, that changes things to being much more bearish, right? Next up, we have the XLC for communications, a heavier weighted sector, not the heaviest of them all, but certainly heavy though. What do we see here? Certainly heavy, though. That was a weird, awkward saying. Nonetheless, bear with me, guys. What do we have? Big lower highs, right? And this thing continues to jump around on me. Wow, platforms all sorts of whacked today. Nonetheless, if you're enjoying the content, I appreciate you sticking through all of these little nonsense issues. Failed breakout, right? Failed breakout up and over this 59, right back down underneath. Technically speaking, this could be a look above and fail. We're looking for lower and the equal low. That sort of puts into play the H pattern, right? When we get there, short proximity of time, equal low, boom. Breakdown underneath 57. Our target underneath, do we have one? No, we do not. Let's go ahead and take a quick peek here on a longer time frame chart just to see what we're working with. So again, we've already come into that quote unquote reset level here. The next major support that I can identify from this sort of zoomed out look would be here around that 53. So quite a ways to fall here inside of the communication sector, which obviously is bearish drag for the S&P 500. Hopefully you've gotten the sense already that it's not looking grand out there in the market as of right now. Continuing along, XLI for industrials. Let's just quickly pop this back down to a yearly. What do we have here? Again, the theme persists. Clear lower highs coming in for the equal lows, sets up the opportunity for a breakdown and follow through for a new lower low. And obviously, once we have the lower low, we can afford the next lower high, so on and so forth. So the downtrends are really just firmly in place at this point in time, with the big failed moves for higher lows at this point in time throughout the course of this week, right? It would have been a different story if we got a little bit of follow through on today's session, pulled back, done something like this. Obviously, that's pure hindsight and speculative thinking, but I'm just sort of illustrating how trends can change, and it currently does not look like this downtrend wants to change back to the upside. So continuing along, XLK, a more important sector, the heaviest of them all, obviously, for the tech sector. Big sort of heads up here. As we were just looking on the SPY chart, notice SPY took out the 405 to the upside, and in the weekly watch this video, we were essentially looking for a pause in the selling, maybe even a dead cat bounce. So over 405, again, it did look promising for upside. Thank goodness I wasn't at the screens today looking for longs in the face of this big bearish activity, but nonetheless, this could have been an advanced heads up warning. I'm not saying that this is going to work perfectly every single time. Obviously, I wasn't at the screen today to take advantage of it anyways, but notice how this never took this level out, whereas the S&P did take that level out and moved into this range. This would have been your indication, right? The heaviest weighted sector of them all isn't even structurally, relatively strong or, on par with what the index is doing, a little bit of a red flag, right? So nonetheless, this has respected this as resistance, this 140-ish area right here, the bottom end of the prior balance. We're establishing new value underneath. We've come from the top all the way back down to the bottom. Strikes me as a bearish look, right? It doesn't look like a capitulation bottom either. Noting the volume here. The volume was not really that impressive to the downside. Sure, it's on an uptick, but look at what we had in here. It's nowhere even close to that 20 million, 25 million shares per day. So overall, XLK does look like it could head lower into the remainder of the week. Our critical support to the downside is 125.38. And again, I'll just show you where that's coming from so you believe me and you don't think I'm just pulling numbers out of thin air. Here it is. If I zoom in, Prior resistance, 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 resistance. It breaks, retest, and then we're off to the races, right? So 125.38, 125 whole dollar has some serious significance here inside of our heaviest weighted sector, the tech sector. So the outlook is for lower. Watch to see what happens as we move into 125 would be my next big area of support to see if we can form a bottom. And if from that bottom we can form a higher low, an equal high, something that would potentially reverse the trend as of right now, clearly in the territory of the bears. And the outlook is for lower, which is not good for your S&P 500. Being a risk-on sector, this is not really what we want to see it doing, right? So no clear bottom signs yet in the S&P 500. XLP for consumer staples. What's going on in this one? Obviously taking the heat of today's activity, falling out of this balance. Obviously, again, target earnings had a lot to do with this move, but complete and utter destruction here right down into this area of support around 71.50s. I wouldn't chase this short here. That might be like a common misconception. So you see nastiness unfold. It's like, okay, time to jump in short all of the consumer staples names. You know, the damage has been done, right? Generally speaking, I wouldn't be surprised, especially because it's come right into a nuanced level like this, maybe a little bit of a dead cat bounce or even just some sideways activity. And if we can put in a bear flag, that's fine. The next break opens up the door for that short opportunity. Now you have tight risk with a stop over that consolidation. So overall, yes, nasty in the consumer staples sector, but would I be chasing it short here? Probably not, right? We have that 100% retracement phenomenon. Dead cat bounce, lower high, equal low reattempt opens the door for lower, okay? So just be mindful of that in the consumer staples sector. This being a defensive sector as well, coming off of its highs strikes me as a good thing. Remember that this was good in here, but again, if this really starts to break down underneath this 71, 70-ish area, that's like too much breakdown off of the highs in a defensive sector. Again, we don't want it leading the charge, but we also don't want it breaking down and making new lows on a sort of yearly or monthly basis, right? So overall, concerning look here inside of consumer staples. Next up, we have the XLY for consumer discretionary, another heavier weighted sector. What's going on here? Clear lower high. Again, this is sort of the theme of the video so far. Lower high has been put into place. We already have the equal low. We have the H pattern clear as day here. We had a 3-day balance. We've fallen out of that. We've doubled the range to the downside. That has been fulfilled. 141.65. Is it going to hold up for a little bit of a dead cat or consolidation then break, or are we just going to get follow through tomorrow? Noting that we're on day one of a breakdown from a 3-day balance, I wouldn't be surprised to see it break first into tomorrow's session. Slight uptick in volume, but certainly nothing really impressive here in the XLY. I don't really think that the true selling has begun. Maybe if we take that out and we see a big volume selling bar come in, something again on par with 20, 25 million shares on the day, that would be closer to a capitulation bottom type feel. But look at how minuscule volume was on the selling on today's activity. So overall, the look here is for lower, all right? So our sectors are certainly confirming risk off. The outlook is for more pain into the remainder of the week. Let's take a quick peek at our sector grid in terms of ratio, right? The XLK, finding a little bit of a double bottom, but nonetheless, you get that lower high phenomenon. If, again, the market's in store for some more pain into the remainder of the week, let's see if it does, form a new lower low. XLV, perking up here, actually being a little bit of a relative strength in the healthcare sector. But again, as we know, 1 of 4 is not really enough to change the tone to risk on, certainly after the structure we've just seen as well. XLY continuing to fall off of a cliff. We know that that was that equal low. And the XLF actually perking up. That makes sense because it was up towards the top of our list, both of those, healthcare and financials, on today's session. Nonetheless, remember that this is still just kind of in a neutral box right here underneath a downward sloping gold line, which is the 50 simple period moving average. So overall, from a ratio perspective, obviously still in risk off mode. Down at the bottom, our risk off sectors themselves would confirm that as well. Obviously, big hit in consumer staples, but still above, or well above actually, a upward sloping 50 SMA gold line. XLE continuing to point higher. Same thing with utilities, and the XLRE just going sideways, real estate sideways. So again, 1 of the 4 aggressively pulling back, but still above a 50 SMA is not enough to turn off the risk off sentiment from these 4 sectors down below. So overall, hopefully you get the sense that it is not a good look out there, and we are certainly not coming in for any sort of meaningful bottom just yet in our S&P 500. Let's get back on over here and take a peek at the VIX. We'll do the VIX first, and then we'll get into the TLT. I want to talk about bonds today. What do we see in the VIX, right? So obviously perking up a little bit, but I mean, on a day as nasty as today was, why was this not up here? Why was this not at 35? Why was it not poking above 35? And again, there we go with the pointer. But bear with me. Right? Like, why was this not here? Sure, we're perking back up, but nonetheless, it's not like this is certainly not a quote unquote panic fear bottom. A panic fear bottom at this point in time, now that we've been in this range healthily here for quite some time, would be a spike in the VIX up to like the 40 handle, maybe even a little bit higher than that, and then coming back in aggressively, right? And it's currently just not the look. So the VIX would also support the idea here, based on its position, that there is still some more selling to be done, right? When everyone throws in the towel and it feels like there's no hope left for the marketplace, the VIX has spiked up around 40. That might be when the turn ultimately comes, right? That's technically speaking what we would refer to as the capitulation type bottom. In terms of the TLT, there. Let's take a look at this. This is obviously our 20-year bond, right? And if we just zoom in here, notice that it perked up. And this is truly, the idea of risk off. As the market is, continuing to deteriorate, there should be some sort of flight into bonds, right? Fixed income type instruments. And this did perk up on today's session, which also supports the idea that the market is in risk off mode. Notice also that it made a higher low here, and there's potential for it to reverse back higher up and over this neckline, right? A higher low double bottom. If we take out roughly, what is this, 119? Yeah, 119 area. Again, opens up the door for higher here, truly supporting the idea that the market's in risk off mode. Now, it hasn't quite been respecting that for obviously the entirety of this sell-off here. There hasn't been like a massive flight into the TLT, but nonetheless, let's see if this will perk up just a little bit, right? As we're talking about financial instruments, let's take a quick peek at the TNX. What's going on with the rate? Obviously, it's almost inverse to what we were just looking at. This is a 10-year versus a 20-year. Nonetheless, starting to get a little bit of that head and shoulders type activity. So if this falls down, obviously your TLT should perk back up. And again, that's more of your risk off supporting in terms of the bonds, right? We know that we're in a higher interest rate environment. So, in theory, this could continue to mosey on higher, but we'll ultimately see what the relationship is with the TLT and bonds overall. Are people going to flood into fixed income type assets like that? Or is it just like everyone run for the exits everywhere? No one wants anything. That's where you got a major problem, right? So overall, things are continuing to support more downside in our marketplace so far. Let's get on over to the SPY itself, talk about tradable levels into the remainder of the week. Again, I was not at the desk today, but nonetheless, here's that comparison I was making in the XLK. Notice how the SPY took out that structural high, moved into this prior range right here, whereas the XLK did not. Well, we are now back down inside of the range. So that might have been a little bit of a clue. Again, I'm not saying I played that. Obviously, I wasn't at the screens today, but just things to be thinking about. And whenever you're thinking about intermarket analysis, those are the types of things to be thinking about. Nonetheless, where are we? We're certainly inside of this really choppy area. And it just reminds me over and over again that trading this market to the downside has been painful, right? Unless you're shorting at resistance every single time, then it's really tough to catch a downward move unless you're just an intraday scalper. So again, the current look would have been, okay, if we can get to that 415.50, then that's the top of the weekly expected move. Maybe there's a short to be had there. And we also know it was prior resistance and support as well, right? Mainly this double bottom from back here in that little rally area. But we didn't even get there, right? So falling out of bed, big look above and fail. You could say something like look above and fail should be targeting this 385 level. So that could be in store for the remainder of the week. Notice that we also have the bottom end of the weekly expected move, which is sort of akin to what I was talking about in the XLP. Is it wise to be shorting it into the lows here? Again, I personally don't think so. This market has not really rewarded anyone for shorting into the lows. I suppose if your time frame is long enough and you're looking for, 6-month positions, 7, 8, 12, whatever month positions, that's fine. You can look for lower at the lows here. But nonetheless, in the short term, notice how here, every time we come into the low, we rally a little bit. Here, it was really just a choppy day. Then the gap down produces this balance. It's been really hard to trade the downside, right? So overall, my first thought would be that the market can move lower based on everything we've seen so far, but I'm not entirely sure I'm willing to outlay capital here looking for a continuation lower first. I want to probably see the break and then a retest and then a rollover, right? So 385 would be that number. What do we have for supports underneath us? Do I have anything mapped out? I have 371. Let's show you where that's coming from. If I scrunch up the chart and go back over here, Let me just bear with me here as I'm moving through it. So big double bottom from in the past, right? So 371 would be the next level after this 385, which is the bottom end of the weekly expected move again in here. So overall, I would want to see what happens into the end of the week. Do we get consolidation down here, set up a hourly or 30-minute bear flag? That certainly opens up the door for a more respectable short. Stop goes over those highs of the flag, right? So watching for something like that. Intraday double tops that fail, something like this, and then lower, right? So I want to see some sort of setup instead of just blindly shorting this thing into the low end of the weekly expected move. But overall, again, as you've seen throughout the course of today's video, and as I've seen, because again, I'm looking at these charts for the first time today, it was nasty out there, and we are looking for lower in the marketplace. Let's get on over to the internals here. If you're not familiar with the screen I'm about to pull up, I've got a video for you in the top right-hand corner describing what this all is. It's really more useful for intraday trading. So if you're an intraday trader, it'll help you make better trading decisions in that time frame. But for now, we can just sort of look at it in hindsight and gauge how truly nasty the day was, right? Obviously, our volume read, we're traditionally looking for minus 300 million or positive 300 million. We more than doubled that on today's session. So certainly lots of outflows there in the marketplace from that perspective. That confirms the bearish activity. The same thing holds true with our advanced decliner being down here in the trend zone. However, as you guys know, we've been running into this issue recently of correlation being too highly correlated, to be quite frank, and we get these nasty whipsaw type moves. This high degree of correlation underneath negative 2,000 strikes me again as an indication to not short the lows of where we currently are. Everything was down. So if money has to flow anywhere tomorrow, there might be a slight uptick that keeps the SPY at least sideways or choppily neutral and not necessarily just continuing to fall off of a cliff to the downside. So that would be a big takeaway here, is that everything was correlated. Maybe there's a little bit of a bounce or just neutral activity tomorrow instead of continuing this outright bloodshed, right? The next thing would be, of course, our tick, what's going on in the bottom left-hand corner. Zooming in over here, fairly neutral on the Monday and Tuesday sessions. Notice how the cumulative build just completely overshadows everything else that happened throughout the course of the prior portion of the week, just confirms the bearish activity, right? So overall, internals would support the idea for lower as well here, with a little bit of caution from our advanced decliner saying, hey, just be careful as things sort of balance back out and move from being overly correlated to, more neutrally correlated to, just skewed to the downside, something that, let's just think of this in terms of perspective, right? And I'll just give you numbers here. So this is like 100 out of 100 stocks are moving to the downside. A more acceptable and sustainable read might be something like 80 of those 100 stocks are moving to the downside and 20 are rotating higher, right? Rotation keeps a market trend going. So this would be what we're looking for, and this is unsustainable. So again, all I'm getting at is that there could be some more neutral activity instead of outright continuation into tomorrow's session. And again, I'm sort of walking through this the first time I'm seeing it for today's session, so sorry for the ramblings, but hopefully you find that useful. Let's get on over to our market profile quickly and just take a peek at what's going on here. Big extended trend day to the downside. Notice that you have a string of single prints up here. I would carry that forward as just a weak area on the chart. If for some reason there's some sort of rally, I don't think that that'll be the case into the remainder of this week, but going forward, just remember that there's a string of single prints in there. Let's go ahead and expand that so I can read you the numbers here. We're technically looking at roughly 4001, 4002, 4002, right? And our ES down to 3986, 3987, that general area. Look at the thin volume as well, right? In the volume profile right here. It just strikes me that if we were to move back to it, there could be a move through there relatively easily, noting the lack of structure, right? And by the way, if you're not familiar with this screen and what I'm talking about, I've got another tutorial video for you in the top right-hand corner to describe everything that we're looking at here. In terms of the trend day, though, notice how the point of control was left lower in the session, which strikes me as bearish acceptance underneath the sort of balance that we were seeing. So you had 2 days of balance here, started to become a breakout with the point of control firmly underneath that 2-day balance, strikes me as a bearish indication, right? So overall profile confirming as well. We don't really have any other structural deficiencies to be looking at. I suppose in the overnight session, we did come in and tag up at this virgin point of control. So that's interesting there. But traditionally, we only look at that in a regular trading hours type activity. So it remains a VPOC, virgin point of control. So that, could be tagged up in tomorrow's tomorrow's session. Maybe a quick pop to the downside, then we consolidate and get more of that neutral read based on what we just saw in the advanced decliner. So scenarios that I'm starting to formulate for as we move into tomorrow's session, right? That's all we've got in the market profile. Let's get back on over to the platform here and round out the broad market. Not sure how we're doing on time, but hopefully you're still sticking around. If you've enjoyed the content so far, feel free to drop the video a thumbs up just to let me know that you guys enjoy this stuff. It's worth my time to make these, and we'll of course continue right along. In the QQQ, same sort of look, right? Here you go. There's that neckline or sort of breakout point, failed right back down underneath, coming into the weekly expected move low, and also 287.50 support. The other thing that I would point out, and why I don't necessarily think, and I'm sorry for backtracking here, but this is just coming to my attention. The other reason I don't necessarily think that we're just smashing through 385 into the remainder of the week is because we also have, if you remember from the weekly watch list video, that high volume node on the weekly chart and also the anchored VWAP from the sickness lows of 2020, right? So again, those don't necessarily mean that we're making a new all-time high anytime soon off of a big bounce there, but I don't think it's going to be so easy to just crack right through these lows with those two pieces of support there that might not be as obvious as what we're seeing on the chart itself. So just wanted to bring that up as well. If you're not sure what I'm talking about, go watch Sunday's video and you'll see exactly what I'm talking about early on in the video. Nonetheless, QQQ, same sort of idea here. Not sure that here's the time for new shorts. The lower high was the time. The break of the prior day's low was the time. The rejection from that little upper wick that you see on today's session was the time. So going forward, again, don't really think that here is time for new shorts. Instead, break, retest, look for that gap to fill underneath. We have 280.49 down to 276.83. Could be a short trade there. Anything underneath that, we don't really have any supports mapped out. So let's go ahead and find one together. Again, I'm not saying that we get there into the remainder of the week. I just want to have something ready for when and if we start, making this move lower. Let's see what we've got. So 266.71 would be the next level for you guys to pay attention to. So carry that one forward there. And to the upside, if we do turn around, I mean, look at this, guys. Really, really choppy. Intraday trades only. It's really hard to say anything meaningful about the structure here as we're playing around in this really nasty and volatile range. If we can start to clear and get into that resistance trend line, yeah, maybe that starts to change the tone of things. But as we've seen throughout the sectors, throughout the market profile, throughout the internals, things don't really look like we're going to get a break of the resistance trend line anytime soon here inside of the QQQ. So looking for lower, probably waiting a little bit patient here. Break and retest look good underneath 287.50. Continuing along, IWM Russell 2000 and the small caps. What's going on here? Remembering that this is more of a risk on, risk off indication, not necessarily an instrument to trade. This is actually kind of surprising, more neutral in the midpoint of its weekly expected range. Obviously, don't get me wrong, the look is for lower here. We had a fake break of the two-day balance there, fake break closed back inside right on the lows there, but at support instead of underneath support like some of the other broad market indexes that we've seen so far. So in the IWM, if you are interested in trading something short, maybe the break is for here to get your equal low and the bottom end of the weekly expected move. So underneath 174.75 gets you to 169 here inside of the IWM. Again, it doesn't really strike me that this just wants to perk back up and make a new higher high, right? So if we get something like this, and then higher high. Technically, that's a new uptrend, but it doesn't look likely based on everything that we've seen so far. And obviously, in the grand scheme of things, this is just a lower high, right? So overall, still strikes me as a risk-off indication here in IWM. Let's continue along into our core list of companies now, see what's going on with these guys. Again, I was not at the desk today, so let's see. What do we have to be excited about for tomorrow? Apple, lower high, coming in for the equal low here, 139. So that would be something to watch. Watch for either a dead cat bounce, anything that early in the morning starts to produce a bounce and then form a double top intraday. Shorting that neckline to get back down into that 139 strikes me as a reasonable trade here. Looking for this H pattern to sort of pan out, break down under the lows, just like we talked about in the SPY and some of those sectors. Notice how muted volume is here. It doesn't strike me as a big capitulation type bottom. I don't think we truly discussed it on the SPY, and again, I'm sorry for jumping around so much in today's video, but I did want to point out, notice how volume, sure, it's an uptick from the prior day, but it's not even on par with what we saw on that sell day right there. So it does support the idea that the market could see, and again, the VIX could see that spike, more volume come in. It feels like it's the end of the world. That's when everyone throws in the towel, and that's when there is potential for a capitulation bottom. So nonetheless, back over to Apple. Sorry, had to point it out. All these things on my mind. Didn't have a clear schedule coming into today's video. Let's see what we got. If you've made it this far, drop me a comment down below that says like madness or psycho or something like that down below in the comment section. It'll throw everybody off because usually we're saying night owl, but you guys know the deal on it. This video with my head all over the place. Nonetheless, Apple outlook is for lower. 139 is your level. Clear lower high. Dead cat bounce early on in the morning. Looking for intraday setups that would open the door for lower on tight risk. All right. Next up is Netflix. What do we see here? Zooming in, rolling over, never really produced that squeeze up and over that 190, which to me is kind of interesting, noting that we gapped up and over it here. I guess, people are willing to hold on to this one for a long time. I would have imagined some of the short inventory from here started to squeeze out of that and make the move higher. Nonetheless, clear lower high. Continuing the downtrend here, the look is for lower. If we break this low, that strikes me as a reasonable setup here underneath 176.50s to get into the equal low here around 165. Carry that trade forward into tomorrow's session. Anything that plays around in the prior day's range, I really just wouldn't want to be overly convicted. It's still longs up and over that 190 with acceptance, and again, shorts underneath for that equal low is the setup in Netflix. Tesla, what do we see? Here. Anything crazy from Elon Musk? I wasn't on Twitter today, but things look reasonable here. H pattern, clear lower highs on a bar by bar perspective. Equal low is in place. Because this one has consolidated here and it's really got more of a balance area instead of just, coming in for a clear something boom that looks like this, I would say breakdowns of 700 might be playable. Noting that if we get a breakdown of 700, that's day one of the breakdown, maybe Friday, sees some follow through, right? And we know that our level underneath is 625. Again, same sort of idea with the volume. Not indicating that this is any sort of major bottom as of right now. Just seems like normal selling from this perspective. So look for lower inside of Tesla underneath 700 to trigger a short. AMD, what do we see here? Wow, big failure up and over that 100. So this was actually a promising look. On AMD, the fact that we closed above the 50, closed above the neckline of the double bottom, was also 100 the psychological area. Because this one, so here's an interesting take, right? We do have a short-term higher high. If this pulls in and supports at 92.50, I would say we're starting to build out a new uptrend here inside of AMD. All right, so this is something to watch out for. If we need something with some sort of relative strength or somewhere where we think there's a higher probability of trend reversal, AMD might be it. So watch for the higher low if it happens at 92.50. Obviously, it requires a little bit more downside to get into that support, but if it does something like that, then as we've just sort of outlined, we have a low, higher low, a high, and a higher high right here, starting a new little uptrend. Overall, 100 is still going to be a thorn in the side, and it looks like, with this failure to really get into that 106, really your next resistance is going to be 106 again, and the daily resistance trendline, which has come from, as we know, oops, I didn't want that, we wanted this, the true all-time high here inside of AMD, so a really meaningful resistance trendline. Moving along, what do we see in Facebook? Rolling over, no acceptance at and around that 202.15 breakout point. There was no candle close, significant candle close above, obviously falling back down underneath. Short trades in this one, it could come in for that equal low here, but to me, maybe it's because I still have that long position in Facebook. You guys know about that one. I'm still holding on to it. Again, it's got a 3 to 5 year time horizon on it. Nonetheless, that's besides the point. Maybe it's preventing me from wanting to short it into the top of the gap. I think the better trade would be, okay, we get to the top of the gap, consolidate, boom, you're trading for the gap fill on a day trade scalp type basis, right? 184.84 down to 181. Certainly plenty of range there to pick up on an intraday option scalp, right? After that, obviously your low is the target here around 169. So don't get me wrong. Yes, lower high does look like it does want to roll over here, but would I short it immediately looking for this? No, I would probably wait for the gap fill trade. So that's my personal preference there. And again, longs only on firm closes above now, like better breakout looking bars up and over 202.15, currently not a high probability into the remainder of the week. NVIDIA, what's going on here? Obviously relatively weak compared to AMD. Inside of the balance range here, if it cracks underneath the lows. So I would start to watch this level right here around 166.35. If that breaks, probably looking for an intraday scalp into that 155.50. And then after that, as we know, we've got multiple little gaps to be targeting, not trading through underneath us. 148.71 down to 146.81, 142.80 down to 140.83 are the two gaps in yellow down below us. On upside, again, there's nothing to really do long here inside of NVIDIA until we break the resistance trendline or just recapture the bottom end and top end. So bottom of this balance, obviously top of this balance right here. That's 185.25. Currently doesn't look like it's in play into tomorrow's session. Next up, we have Microsoft Softy. What's going on here? Dead cat bounce, lower high from here, right? So big lower high, H pattern, equal low, would look for lower here inside of Microsoft underneath 250, 250. Target underneath is 239. So I would probably just monitor for continuation into this range, not outright target that number. So just trail a stop as we move to it, right? To the upside, not really seeing anything meaningful here for a significant bounce. I suppose if this were to turn into a double bottom, your neckline break would be up here, closer to 271. It just doesn't look attractive for longs. It's as simple as that right now inside of Microsoft. Last but not least, the beast, Amazon, getting hammered today. I believe this was the worst on our list. Yeah, down 7.16% on today's session. On a stock at this price point, that is fairly impressive, right? And not in a good way. So certainly looks like lower. Obviously, lower highs are in place here. Failed move up and over that sort of neckline break. Sort of the same idea that we talked about in the XLK versus the SPY. So failure there, back down underneath. We are looking for lower. Target would be 2030. Remember that 2030 is that really, really significant weekly time frame level. If we just grab that chart, show it to you real quick. 10 years, yeah, that's way too much time, but you get the gist, right? There's your 2030 right here. One concern about Amazon, right, at these lows, I mean, granted, this much of the move lower is from a gap down. It's still pretty darn extended here on the weekly time frame. And notice that the volume on the weekly bar so far isn't really, it's nothing impressive, right? It's nothing impressive. So could this continue to sell? Yeah, are people really selling it short in here? I don't know. At 2030, being extended on the weekly doesn't really strike me as the best one to be shorting at this level right here. I think there are far better setups that we've seen in today's video as opposed to Amazon short at these lows. Don't get me wrong. If you're an intraday scalper, you want to, jump in here on the 0 DTEs on Friday for a 5-minute scalp to the downside, I'm not saying don't do that. But for again, maybe more swing trade type viewers who are on the videos with a 3-week, 3-month, 6-month type time horizon, doesn't really strike me as a good idea to be shorting Amazon at these lows, right? I would want to see some sort of more structure build out on that weekly time frame. So some longer term thoughts, but I did want to mention them. Just brain dump on today's video, obviously. The one trade idea I had for you was it was at the top of the scanner. I saw it on my screen as I signed in today. It's ARKK. All right, and the idea here is just that we have a clear 4-day balance, right? If we do something like this, obviously highs and lows are darn near equal. Breakdown of these lows, look for the equal low in here. So just to give you a number, that's 40.75, big flush point. If it breaks, moving into these lows right here, around your 35.10, 35.25, that would be the target. And noting the market does look relatively weak, we have an inverted hammer on today's session here inside of ARKK. I would say lower would be likely. We also know that the tailwinds of the trend on the daily are our friend here and will be working in our favor. So that's going to wrap up today's brain dump because that's exactly what it was. I apologize for the unstructured content, but if you enjoyed it nonetheless, again, drop that comment down below calling me a psycho for just being all over the place today. Or if you just want to keep it classic, keep it traditional, drop Night Owl, of course, because the video is coming out fairly late. If you enjoyed it, thumbs up would go a long way as well. And with all of that being said, I wish you a green trading week.